I have never seen such a bear trap. And I've been doing this business for 50 years. I've never seen such lying, okay, about the market. Every day we're hearing from the fake business network more crap, more lies. I just want you to answer one question, common sense question. Help me out here. Why is it for 13 years, since 2008, we destroyed our economy by using what we call QE, providing low rate money through printing of money to our CEOs so they could buy their own stock, and in buying their own stock they were reducing the amount of outstanding stock they had, outstanding shares, and when they do that, that means they don't have to have earnings to push their stock price up. In other words, the more they take their stock price or the amount of shares they have and reduce them, every time they reduce those shares, and where do they get the money to do that? The Fed gives them money free, right? So every time they reduce those shares, earnings would go up without profits. They would just go up. And earnings push up stock prices. So think about this. That was all illegal. Doesn't it even sound illegal? Of course it is. But remember, that was all changed going all the way back to Reagan, because he needed to do this because when he took over from Carter, things were so bad. He had to get the market going. But he only intended to keep it going for a few months, using QE. But he never changed it. Once it became legal, it was legal. So Bernanke came in and Obama, when they came in 2009, they said, let's keep going with QE. And QE is a terrible thing because QE only benefits the very wealthy. QE only benefits the CEOs who get stock options. QE doesn't help the working folks, okay? And it doesn't help the companies. It goes just to the CEOs. They're the ones that get all the money, and the very big shareholders. That's it. But they lied to us, and they told us that everything was going to trickle down. Don't worry about it. Stocks would go up, and it would trickle down to the Main Street worker. We're still looking for the trickle. There's no trickle, okay? Never trickled down. That was a lie. So where we are today. So they fought like hell to keep interest rates down to zero. They destroyed our economy. Inflation went through the roof, all because of printing money. And then, of course, when Biden comes in with his policies, the first policy was to destroy our oil industries, and that caused real inflation. So they kept fighting to get rates back down to zero. And they did. But now, all of a sudden, take a look at this chart here. When rates went up from 2008, when we got to 2020 and rates went up 2.5%, the market collapsed. 32%. But they said, oh, that's COVID. No, it wasn't. It was the rate hike. Anyways, they dropped rates back to zero, like they always do, to create another fake rally. And who benefits in these rallies? The very, very wealthy. The top 101%. Not the 1%, the top 101%. The very, very wealthy. They benefit from inflation. So, when we ran up 114% after dropping 32%, they decided, well, boy, we got a lot of inflation. We better do something. Let's raise rates back to 2.5%. Because they were confident it had nothing to do with inflation. It had nothing to do. It was all COVID. When they raised rates back to 2.5%, the market immediately dropped 24%. So let's look at this chart. 2.5%, we dropped down 32%. 2.5%, we dropped down 24%. Now we're in our last rally. The rate's at 5.25%. Wait a minute. 5.25%? Does that really make sense to you? When for 13 years we did everything possible to keep rates at zero, but it's okay now? Well, they rigged it, and I talked about it last week. The reason they can keep the market running for a short period of time because they took two stocks, Apple and Microsoft. They injected $15 trillion just into those two stocks, to keep the S&P going up and keep the Qs going up. But they can't do it for long. I mean, does that make sense? 5.25 is okay now? So this market is going to pivot at some point and totally collapse. Now, at 5.25, thinking about it, at a time, we have our economy's contracting, earnings are contracting, the dollar's contracting, productivity is contracting, our manufacturing is contracting, wages for 25 months, when you adjust it for inflation, been contracting. Are you kidding me? And here's the real problem. The consumption right now, when we're consuming goods, it's not with, no longer are they using money, discretionary money, that's the money after you pay your taxes. When they give you your paycheck, taxes come out. Then you pay all your living expenses, then you pay your bills, and what's left is discretionary. That's good money. That's not debt. And when you go consume with discretionary money, that's great for the economy because it's not debt. But guess what? That discretionary money is no longer used for consumption. You know what they're using that money for? Discretionary? To pay payments on debt. And that's when your economy starts to collapse. Once that discretionary money is gone and people using discretionary money to pay their debt, and worse, withdrawals, now they're withdrawing money from their savings account, their 401ks, if they have a pension, their insurance policies they're cashing in, credit cards, they've gone wild on credit cards, and now the interest rates are 5.25, no more 0. And they're trying to convince us, oh, we're going to come in for a smooth landing. What are you, nuts? Smooth landing? It's like a kamikaze plane coming in. This is crazy. So this whole thing they've been selling us for 13, 14 years, we're supposed to forget about. Oh, don't worry about 0 rates anymore. Don't worry, we're right at 5.25. No, we're not. So be careful. Learn how to sell short. Learn how to sell short. And I'm going to tell you one thing that always helps me, big time, when I'm learning how to sell short. And I'll show it to you right now. It's right here. This is a chart that always worked well for me, right here. I designed it myself. It's a chart that follows the money. Nobody else does this. Oh, there's a lot of knockoffs. But it's not my chart. This tells me when money's coming out. See, no longer can we depend on fundamentals of a stock to make a decision to buy a stock. I don't care about free cash flow anymore. I don't care about earnings anymore because they don't care about it anymore because they rigged this market so much with QE. Fundamentals mean nothing. But here's what means a lot. If money is coming out of your stock, the stock's going to go down. See it right here? From here to here, that's the sweet spot. Once it turns red, you know the stock's going to crash, go down. If money turns green, if this turns green, and on the upside here, money's going to go into the market and stocks are going to go up. This is never wrong. Red, you sell. Short. Green, you buy. If you want information on this chart or my membership, you want my assistance, my stock picks, just go to philsgang.com. I'll be happy to help you. Okay? All right, well, that's about it. So please remember, this is the biggest bear trap rally, and we got so many tourists who are falling for this. It's unbelievable. We call them our tourist investors. They don't know what the hell they're doing. They just jump in, buying a dip, buying a dip. Okay, that's it. I'll see you on the chart. philsgang.com.